Have you ever wondered why some people choose not to use traditional banks? It's a question that's been gaining more relevance as we see a shift in the financial landscape. For many, banks are the cornerstone of their financial lives. They provide a safe place to store money, offer loans and mortgages, and a myriad of other financial services. Yet, there's a growing number of individuals who are choosing to opt out of this traditional banking system. They're looking for alternatives, and it's not just a case of one size does not fit all. There are various reasons for this shift, ranging from the high fees often associated with banking to the low interest rates on savings, limited accessibility, and even ethical concerns. In our rapidly changing world, the question arises, are traditional banks still the best option for everyone? Stay tuned as we take a deep dive into the reasons behind this growing trend. The first reason that comes to mind is the fees. Traditional banks are notorious for their various charges, and these can add up quickly. Consider the monthly maintenance fees, for instance. Just for keeping your account open, banks may charge a certain amount every month. Then there are the overdraft fees. If you accidentally spend more than you have in your account, you could be hit with a hefty penalty. Let's not forget the ATM fees charged when you withdraw money from an ATM that doesn't belong to your bank. And then there are minimum balance fees, where banks charge you for not having a certain amount in your account. For individuals who have low incomes or irregular cash flow, these fees can become burdensome. They can eat into your savings and make banking an expensive affair. In essence, the cost of banking can be a significant deterrent for many. Another factor to consider is the interest rates offered by banks. It's common knowledge that banks offer interest rates on savings accounts, certificates of deposit, and other deposit products. However, these rates can often be relatively low. This means that your hard-earned money that you've entrusted to these traditional financial institutions may not be growing as much as it could be. Think about it. Your money is essentially sitting idle in these accounts, earning a minimal interest. While it's true that it's safer than some riskier investments, the potential for growth can be somewhat limited. There are alternative investment options out there that can offer higher returns. Options like mutual funds, stocks, or even digital currencies may provide a higher yield than traditional banks. Of course, these come with their own risks and are not guaranteed, but for those willing to take that risk, the potential for growth can be significantly higher. So the potential for growth is another reason some might steer clear of traditional banks. Let's not forget about the accessibility of banks and their minimum balance requirements. It's undeniable that the convenience of accessing your bank plays a significant role in your banking experience. Traditional banks, however, often have limited branch locations and hours of operation. This can be particularly inconvenient for individuals who live in more remote areas or have work schedules that don't align with banking hours. Imagine this, you're working 9 to 5, you have a banking query, and you need to speak to a representative in person. However, your local branch operates from 9 to 5 as well, and it's closed on weekends. This lack of flexibility can make managing your financial affairs more challenging and time-consuming than it needs to be. On top of that, let's consider the minimum balance requirements that some banks impose. To avoid monthly maintenance fees, These financial institutions require customers to maintain a certain minimum balance. For some, this might not be an issue, but for individuals with fluctuating balances or those with limited funds, it can be a significant burden. Picture yourself in a scenario where your balance dips below the required minimum. Suddenly, you're faced with a fee that could have been avoided. These fees can accumulate over time and take a toll on your finances, especially when you're already working with a tight budget. Moreover, this requirement can limit your financial flexibility. You might find yourself in situations where you need to make a payment, but you're hesitant because it could bring your balance below the minimum and trigger a fee. This predicament can lead to missed opportunities or even late payments, which could negatively impact your credit score. In summary, the combination of limited accessibility and minimum balance requirements can make traditional banking less convenient and more costly than it should be. These challenges can add stress to your financial management and may lead you to explore other, more accommodating banking options. These hurdles can make traditional banking a less desirable choice for some. Now, how about the level of service one receives at a bank? You see, in large banking institutions, customers often become lost in the crowd. The personal touch, the feeling of being more than just an account number, may be missing. It's like you're just another drop in the vast financial ocean, an insignificant cog in the giant banking machine. In contrast, smaller community banks or credit unions can offer a more intimate banking experience. Here, the staff might know you by name. They understand your financial goals and needs by offering tailored advice and services. In these places, you're not just an account number, you're a valued member of their banking community. This personalized service can make a world of difference. It can transform banking from a cold and impersonal task into a warm human experience. It makes you feel seen, heard, and valued. It's a critical factor that can significantly influence where people decide to place their hard-earned money. The impersonality of big banks can be a turnoff for many. Security is another concern when it comes to traditional banking. While banks have robust security measures in place, the risk of fraud and identity theft is not completely eliminated. Cybercriminals are relentless in their pursuit to acquire personal information, and they employ sophisticated tactics to achieve their means. They can hack into banking systems or use phishing scams to deceive individuals into revealing sensitive information. Despite the best efforts of banks to protect their customers, data breaches can still occur, leading to unauthorized access to accounts. It's not just about the money that could be stolen, it's also about the personal information that could be used for other fraudulent activities, causing significant stress and potential financial loss. The unfortunate reality is that no system is entirely foolproof. The potential for security breaches, combined with the ongoing threat of identity theft, can make traditional banking a daunting prospect for some. The fear of falling victim to cybercrime can indeed be a compelling reason to avoid banks. Lastly, let's talk about ethical concerns and the rise of alternative financial services. In an age where consumers are increasingly conscious about where their money goes, the ethical practices of large banks have come under scrutiny. Some individuals find it problematic that their hard-earned money might indirectly support industries like fossil fuels or firearms, which they might be morally opposed to. This ethical dimension of banking is often overlooked, but is crucial for those who want their financial activities to align with their values. This is where smaller community banks and credit unions step in. They often engage in socially responsible lending and investing, contributing to local development and avoiding controversial sectors. They offer a sense of community, personal service, and the satisfaction of knowing your money is being put to good use. But it's not just about traditional banking anymore. The financial landscape is changing, and the rise of fintech companies and digital payment platforms is hard to ignore. These alternative financial services are shaking up the banking industry, offering competitive interest rates, lower fees, and innovative features. Digital banks and peer-to-peer lending platforms, for instance, are growing in popularity due to their user-friendly interfaces, ease of access, and attractive returns. Cryptocurrencies and blockchain technologies are also part of this new financial paradigm. They offer a level of transparency and decentralization that's absent in traditional banking. While they might seem complex and intimidating, they're becoming more accessible and mainstream, opening up new possibilities for investment and transactions. These alternatives aren't just about convenience or returns, though. They represent a shift towards more ethical, inclusive, and customer-centric financial services. They give individuals more control over their money and how it's used, addressing many of the concerns associated with traditional banks. In conclusion, while banks do offer a variety of services and conveniences, they're not always the best fit for everyone. The emergence of ethical and innovative alternatives has made traditional banking less appealing to a number of people. In conclusion, while traditional banks offer a range of services, they may not be the best fit for everyone. From fees that can quickly add up for those with low incomes or irregular cash flow, to relatively low interest rates on savings accounts and other deposit products, these institutions have their shortcomings. Limited accessibility, minimum balance requirements, and a lack of personalized service can also deter individuals from opting for traditional banks. Let's not forget the ever-present risk of fraud and identity theft. Ethical concerns about the practices of large banks can also influence an individual's decision on where to stash their cash. With the rise of fintech companies and digital payment platforms, we're seeing competitive interest rates, lower fees, and innovative features that can offer a more appealing alternative. It's essential for each person to evaluate their unique financial needs, preferences, and values. Remember, the choice is yours. Make it wisely, considering all the options available in today's financial landscape.